why higher rates could be beneficial for home buyers. I know you're saying, Eric, that doesn't make any sense. Higher rates means the buyers have to pay more each month for their home, but give me 10 minutes and I'll try to convince you. So everybody knows inflation is bad for mortgage rates. Inflation goes up, mortgage rates go up, inflation goes down, mortgage rates go down. As you can see by this graph, inflation is on the way down. The Federal Reserve has been increasing the prime lending rate and inflation is going down. The target for the Federal Reserve is 2%, and we're just under about 5.5% right now. But let's look at the history of inflation and what happens. This tells you all you need to know about inflation in the Federal Reserve. Time after time, when inflation rose, mortgage rates rose. Then the Fed increased the Fed funds rate and inflation went down, and so did mortgage rates. But they usually go too far in slowing the economy, and we get into a recession, and stock prices go down considerably as well. And when that happens, people lose their money in stocks. But if you invested in real estate, you'd be in good shape. So what's happening with inflation now? It is going down, but why isn't it going down where we want it to be? And one of the main reasons is shelter costs are lagging. Shelter is 43% of the core CPI. And as you can see, in recent months, it's been quite high, even though right now it's at 3%. But as I said before, this is a lagging indicator. It's like a roller coaster. The real shelter costs are the ones at the front. And they're the people signing leases that are only 3% higher than they were signing last year for rents. But the people in the back of the roller coaster are still under leases that are 12, 18 months old that are maybe 15, 16% higher than they signed the year prior. So these are a lagging indicator. As the people on the roller coaster get to the top, their new leases will be going down as well. And then CPI will be going down. And here we show it with this green line that shows the CPI year over year is at 7.9% instead of the 15%. But it's not down to the 3% yet. So if we take the difference between where the year over year number is, 7.9, and where it is now, 3%, and take the weighted average of the 43%, then we get a CPI number that is 3.5% versus the 5.5 that we are at now. So we are seeing into the future that these costs are going down and the inflation numbers will go down as well. But let's talk about inventory. The housing crash of 2008 was caused by too much inventory and the bubble burst. In 2007, there were 4 million homes available for sale. And right now we have 980,000. So we're definitely not in a housing bubble. And then we look at the number of households. In 2007, 116 million households. In 2021, we were right at 130 million. So we've increased the households by more than 14 million, but we've decreased the inventory by 3 million. So there's no way that we can be in a housing bubble with demand being higher and inventory being lower. But the real story on inventory is we don't even have what we think we have. The existing inventory includes all homes, even homes that are currently under contract. So inventory is actually less. When we take into that consideration, we're probably at about 578,000 homes. And so we've increased that much in population, but we're decreasing our inventory by a phenomenal amount compared to the bubble. So there's no chance that we're at a bubble. If you looked at the history of inventory, we should be in the 1.4 range to a 1 million range, and we're at the 578,000 range. So we are extremely low in inventory. So let's use this as an opportunity. It's difficult to time the exact bottom, but I can show you how buying now will save your buyers money. Most of the time, people wait for rates to go down, and then the housing prices start going up. And that's when the seller is more confident and there's more competition. We don't want to wait until everybody else is in the market and the sellers aren't willing to negotiate. What we would try to do is get it before the bottom of the market, and the seller is more fearful because there's less competition and you're able to negotiate a better price. You may have to pay a higher rate for it, but that's really not going to make a difference when you take into consideration the difference in the housing cost because of appreciation. And look at what happened at the last cycle when the housing market bottomed early 2012. A year after that bottom, housing prices went up 8% over the next year. So an 8% increase in prices. Now let's take into consideration in 2012, there was 2.4 million homes in inventory. We are currently at 980,000, and as we just showed, it's really not 980,000, it's more like 578,000. So when we have a higher population, a much lower inventory, I think appreciation is going to be much higher than 8% over the next year. But let's just use 3% to be very conservative so we can show how the buyer can take advantage of buying now instead of waiting. So in our example, the home value is 500,000, mortgage amount 400,000. Say rates have risen about 1%. So let's say that they're going to have to pay a difference in interest of 1% compared to what they would do if they waited. So that monthly payment is $257 more, and over that year of increase, that's $3,084. But let's say by buying now, they have the opportunity, because sellers don't have a tremendous amount of people buying homes, that they can negotiate a discount of 2% through purchase price or negotiating seller paid closing costs or whatever. And then over that next year, the price rise as rates decline at 3%, and we get a 15% appreciation. So let's also take into consideration not just 3,084, but let's add some more money for the refinance and call that $5,000. And our total benefit to the buyer is $20,000 by buying now and then refinancing later and getting the same rate that everybody else got, but you're $20,000 ahead of the game. So remember, when rates go down, more people get into the market and there will be more competition, meaning less negotiation with the seller for a lower price or concessions, and possibly bidding higher than listed price to beat out the other offers. The best way to get started buying your home is to apply online, so you can use the code on this screen you see here and fill out the application, or you can give me a call, shoot me a text, or send me an email. The point is, housing prices aren't going lower. The time to buy a home is now. Get your equity and refinance later.